If you're confused by the markets up and down every other day, well, then that makes you normal. But I want to walk you through what's actually driving that and what are the smart decisions to make right now, because a lot of people are making a lot of money. And most retail investors I speak to are confused. And when we get confused, what do? We hold back, we pull back, and we wait, and we therefore miss the big opportunities. So what's actually happening here? And I'm going to share my screen with you and sort of show you some of the key headlines and the key charts. And if you'd find that useful, then let me know down below in the comments by putting useful down below in the comments. And understanding what drives the market is only going to get you that far. If you actually want to make this actionable, you need to understand the basic rules that drives the stock market. And yeah, there are rules. We don't wake up in the morning as ex-bankers and go, oh, there is that great stock. It just came to me in my sleep. It's not how it works. No, we have very specific entry rules. We have very specific rules on when we sell, and it's way simpler than everybody else thinks out there. And the only reason everyone thinks it's so complicated is because, well, Wall Street would like you to think that, because that way you hand your money over to those bastards, to those lovely bankers, and they will make money of your money, and they'll live in mansions and have yachts and, you know, that sort of thing. And if you want to have that yourself and just have freedom and be able to potentially retire sooner, come and learn the rules with me. I give them away. And when am I giving them away? I'm actually giving them away today on Sunday at felixprehn.org/webinar. We're going to run like a 90-minute, maybe even a 2-hour live educational session where I will specifically teach you when do we buy, what do we buy, and when do we sell, and how do we automate that. It's the true wisdom of Wall Street, so come and learn it with me. Links down below in the description, and if you're going to come and join me, again, let me know down below in the comments. So what have we got? Well, we've got Donald Trump, your president, and he said on Friday after the market closed, he's going to double steel and aluminium tariffs, and he's making also a new push to decouple from the US. He said some very unpleasant things about the Chinese government, and the trade war is basically back in full force. And here are the Reuters headlines. Trump accuses China of violating trade deal and so on. Now, there is something to bear in mind here, that talk and action don't always align. And you want to really understand that part of the sort of administration psychology. So at the same time as they announced that, over the weekend, it became clear that they're going to extend certain exclusion from China tariffs, and those will go through August 31st, which relate to technology and basically technology. So what does that mean? It means the tariffs against China are still, some of them are still on suspension, and they're going to be suspended for longer to kind of make this transition a little bit easier. But at the same time, and this is how this White House works, they're saying, yeah, but we're planning wider tech sanctions on China with a wider crackdown on subsidiaries. So it's always give and take and give and take and give and take. And you would expect the market to hate this. Why does the market hate this? Because the market hates uncertainty more than anything. And there is one measure of uncertainty. It is called the VIX, V-I-X, the fear index. And I'm looking at that here in Trade Vision, which is the platform we build. Get yourself a free trial to that if you like. And the last time the trade war kicked off, well, we went massively up. I mean, really monstrously up. The VIX went up something like 200 odd %. Well, what about on Friday? Well, they announced basically the tariff war's back. Nothing's really changed, right? And what does the VIX do? Well, it actually drops. That's weird, because when it drops, there is less fear, there is less panic. Well, what about the tech market? Surely the tech market collapsed, right? So on the first trade war announcements, the tech market went down 24, 25%. What about on Friday? We knew about this after trading hours. Well, let me zoom in a little bit for you so you can see Friday. Friday is this candle here. How much did we go down on Friday? Well, from the very top of the day to where we closed, and after hours, 0.39%. So where the heck is the panic? Fundamentally, if you think this through, where we are right now, where are we trading right now on the NASDAQ? Well, we're trading in the same levels as we were at pre-trade war, right? Same level, same bloody thing. How is that possible? How has the market forgotten that a trade war is apparently, allegedly, the worst thing that could ever happen? Why are we not down 20%? after these announcements that the trade war is back? Well, I put it down to the market gets used to stuff. And if you've been watching, say, when the Fed was raising interest rates over the last 2-3 years, every time the Fed met at the beginning of that period, it was like, oh my God, what did they say the wrong thing? And the market would move massively. And then they did this 5 times, 10 times, and the market gets used to it. And the market's like, yeah, world's still around, companies are still making money, nothing has really ended. There isn't, famine in the US. We're not like scrambling for iPhones. They're still there. Maybe they'll end up costing a little bit more, but looks like these companies are going to survive and they're going to make money. So the realism kicks in. So we always get the initial fear, overreaction, which is a beautiful opportunity. And then we come back to a more kind of moderate market reaction. And one of the reasons is also that we've got massive buybacks. So US companies are making so much freaking money. They're buying back more of their own shares than ever before. So far, authorized this year are $717 billion in buybacks. Billion. So this is going to be more than $1 trillion this year in buybacks. Plus the tax cuts might actually make that even bigger. So that's very supportive. Why? Because they're essentially buying shares on the market. And therefore, there are less shares. When there are less shares, well, your shares, the ones that are left, are worth more, right? Think about it this way. You have a family business. You own 25% of it. Now you buy your brother out, right? You take away his shares. They no longer exist as a group, as a company. So now there are only 3 shareholders left. Now you all own 33% of the business, right? You didn't do anything. The company bought the shares from your brother. That's essentially the way that works with buybacks. We also have some positive news, and I want to highlight that for you as well. The Japan finance minister says that Japan and US have deepened their understanding of each other's positions and making progress towards a trade deal will meet again prior to the GC summit. So one of these big trade deals, and that might be India, it might be Japan, it might be South Korea, although they're getting a new president coming in, so that one might be a little bit slower. The UK we already have, but then the UK is a vassal state of the US. It's just a colony that just nods and says yes, sir. Yeah, you're quite right, sir. So the UK is not that big a deal. A big one would of course also be the European Soviet Union, but that will take a little bit longer because the bureaucrats in Europe, they're really good at the bureaucracy thing. They're not going to do anything quickly. So I think for me, really, an India deal or a Japan deal is what would make the market go ka-ching, because that would be very, very positive. But despite all of this news and fear and FUD and the terrible headlines out there, we just had in May, can you see that here on the screen? The best May in the market in the last 25 years, quarter of a century. So despite all the madness and the craziness, the stock market is actually doing really, really well. So why is everyone so fearful? Well, a lot of it is, of course, if you consume social media or mainstream media, well, a fear-based headline will always get spun out further. And there are entire channels on YouTube dedicated to the end is near. You've got 3 minutes. You've got 3 hours. You've got 3 days. 2 p.m. today, your portfolio will get wiped out. You will all be poor. The world is over. All that kind of stuff. And they do it very well. Hats off to them for that sort of thing and being able to spin out doom and gloom every week, every year. There's a skill to that, a certain sort of very special mindset, perhaps. But it means that whenever there is bad news, the bad news will travel further than the good news. So you have to kind of bear that in mind. And when you look at bad news, you have to kind of realize, well, this is just like one of those things that just doesn't really have a huge impact. And I think that's a very important thing to do, is like watch what you're watching. That really determines your mindset a lot. And look at the worst stock market in the world, the president that's killing everything and all that kind of stuff. Well, 2025 is the blue line here, right? That's the Trump presidency stock market. I'm not sure whether it's his stock market yet or still Biden's stock market. But if you look at the usual years, which is the black line here, then, well, we're not that far off. We're essentially on the same sort of run up. And usually what happens is after presidents get elected, you get a little bit of a dip because we don't quite know what they're going to do yet. Uncertainty, again, is the thing here. But people are still buying stocks. Foreigners, bloody foreigners like me, they've just bought 300 billion in US stocks this year. And well, actually, it was since 2020. But in 2025, it's 138 billion, likely the second highest on record. So the US stock market dominance continues. It likely will continue. And my money is largely in the US stock market because it makes a heck of a lot of sense, I think. Here, just a nice visualization here, courtesy of Bank of America. That is 2025 foreign inflow into the US stock market. And those foreign bastards seem to really, really like US stocks. Why? Because it's likely the place they're going to get the highest return. And money ultimately doesn't care about politics or anything really. It just cares about making more money. Money will always seek the highest return. And that's what we're seeing here. So it looks to me like we're set up for another bumper 2025 stock market. So I'm very, very bullish on the whole thing. But it is very important, I think, what we buy. I don't think it'll be everything. We actually saw outflows last week. That's important, perhaps I should add that. We saw outflows from ETFs. So that means people are not buying the whole index and everything. They're being more selective. They're being more selective on specific stocks. And I think that's a good policy to have, not just for this year, but actually for the last couple of years. Stock selection has been more important than ever because some do really well and a lot of them don't. And you might just think it's not possible to pick them because you've been taught with that nonsense. But if you actually have a mindset that is open to the possibility that the big banks on Wall Street have a way of making money and have been doing that perhaps for 100 years, well, then maybe there is actually a rule to what they're doing. Maybe they're not just hiring random people and say, go and sniff out the best stock. Instead, they actually have criteria, hard rules that we can use and we can apply in a couple of hours a week to get ourselves to financial freedom. And if you believe that that fairy tale could be reality, then come and join me today. Felix Prehn webinar at 8 p.m. New York time. That's Sunday evening. That's the first time ever, I believe, we've done a Sunday session because so many of you keep saying, well, I have a job. I'd like to get out of it, but I don't have the time to watch your training during the week. So we're doing it on a Sunday. Come and join me over there and I'll teach you how to make your portfolio amazing. All the best. Once. If you're worried what your favorite tech stocks are going to do this coming week, will they go up or go down, then Winston and I have got your back. We're going to walk you through the following. I'll put it on the screen here for you, Winston, which is my watch list here. We're going to look at the VIX, fear. Microsoft, Nvidia, Apple, Amazon, Google, Meta, Tesla, the S&P, the Nasdaq, Palantir, PayPal. And I'm introducing two new ones because these did really well for us last week. And I wanted to show you how we picked them in advance because people often say to me, oh, this chart stuff only works in hindsight. Well, let me show you how it actually works.